Hey everyone, welcome back to my channel. So today I want to talk about the state of the real estate market once again. And I've come to the conclusion that honestly, bills are not the same as what they once were before interest rates rose. And I mean, that was the point of the Fed raising rates to where it has been. Some news just came out about mortgages, new mortgages only being 312 billion this quarter, which is the lowest that it's ever been since 2014. So that tells you a lot of people are not purchasing new homes. And there's a lot of people who are even not willing to put their homes on the market because they're scared of losing that interest rate and not knowing what they would be able to get into. In fact, you would probably get into something a lot cheaper if you were to sell. And so housing prices have not dropped, but the demand has dwindled significantly. And the supply is even less because no one wants to put their homes for sale in a market where there are no homes that they can buy and get into something else. And those who did sell early are now renting, waiting for an opportunity to buy something good. But essentially, I believe that rent that they're paying year to year to year is going to continue to dwindle. And then that mortgage payment that they should have been making is going to be less, less, and less. I don't really see the point in renting for a year when you already had a property and now that you've sold it because you wanted to get out and have the advantage to buy right away, you no longer are able to do that, right? Because you're sitting on the sidelines waiting for rates to drop. But in all actuality, it seems as though they'll only be going up a little bit more. And so if you're one of those people who think you'll get lucky and are assuming that because you sold at lower rates, which is 6% at this point, and you assume it might go to 7 or 8% rates, and that the prices of the homes may drop drastically. If that were to happen, you still may be paying more, but on less of an amount, which can or cannot be beneficial. It really just depends. Either way, human nature is that you'll probably pay more for your home than you had on the previous home. So you'll still be taking on a larger balance, and therefore your payment will definitely be higher, especially with the higher interest rate. Right now for investors, being in this market, not really seeing anything that really truly meets a cash flow positive perspective at this point. Everything has been really cash poor. The best I can come up with was actually taking $20,000 off of a property, still getting the interest rate cut by 0.5%. And then I was still going to be negative $19 a month on that property. Just a horrible, horrible way to look at it. And that was the best deal that I've found thus far, with putting about 10% down. So it's really, really tough. I look for at least 400 to 800 a month in cash flow. And so to be negative 19 when doing your analysis, that just goes to show you that housing prices are significantly higher than what they should be, and that the cash flow just isn't there. And if you're willing to put that 20% down, then you're not really being able to utilize that leverage that a lot of people talk about in terms of, allowing others to pay that off and keeping that cash on the sides in order to invest and maximize it. You don't want to get too risky, but again, when you're doing these analysis, you can determine how much risk you're willing to take as an investor. And for me, I believe I'm very conservative. And so if I can cash flow 400 to 800 a month and not put as much into the deal. I think that that is risk diverse and a really, really good investment. However, haven't been able to find that in 2023 um, in this type of market. And so, again, if we could rewind the clock and go back to early 2022, I think we all would have hopped on several deals. But as the state of the economy is now, it's either you're waiting on the sidelines or you're renting and just losing hope in what a good market might look like. I'm also believing that most of the real gems that are available are being held on to. A lot of people are probably happy with their homes and going to stay in them for the foreseeable future, probably another 3 to 5 years before you start to see the gems, the true gems, start to appear on the market. And that will only happen in real good times where people are like, hey, there might be something better to go after. And when you're not seeing gems available, there's truly no reason um, to sell. And so what I think is going to happen, we're going to see a lot more people building their own properties because that's what everyone was doing in 2021 and 2022 before interest rates increased so much and so drastically. Everyone wanted to build their own home. They wanted something custom made. They wanted something brand new. Nobody really wanted to buy something older, something that's more stable, something that, other people have lived in. And so if they're going to let go of these amazing properties that were passed down from generation to generation, if they're going to let go of these amazing new builds and 10-year young properties and constructions, then they're probably going to be looking to build their own property. And so when we see the increase in demand for new construction, that's when we'll see the best properties hit the market. And that's when you'll be able to kind of soak those up. And of course, if someone is looking to build new construction, they're probably looking to get the most out of their property because what do they want? They want cash in order to fund that investment. I mean, it's just common sense. So we're going to continue to see high cash, high equity. We're going to continue to see people not really lower the prices. And then only those who are forced to sell or need to sell, they will lower drastically because they need to be competitive in a market where cash is king and debt is no longer king. So what we'll see for the first 2 years prior to everyone really just getting tired of their home and wanting to move out, what we'll see is a lot of people who are getting more desperate to sell put their properties on market. I don't really see a lot of desperate sellers on the MLS, on Redfin, on Zillow. They've been holding strong for the last 80, 90, 100 plus days with no offers, back on market again, back on market again, taking their listings off, putting them back on 3 months later. A lot of people took their listings off for 2 months, put them back on right before May. So again, I mean, there's not a lot of desperation in the market. And I think a lot of that is contributed to the fact that they got their interest rates at about 3%, 2%, 4%. Cash flow is strong. If they're not getting their number, they can just hold on to it. There's no real need to sell, but if they had the cash, they would be happy to have the cash, right? So that's really what it is. I mean, when the Fed is raising interest rates and you can now get almost 5% interest in a savings account, why would you want an investment that is a lot more risky than putting it in a bank and getting a 5% return with no risk, no downs, only ups, right? I mean, so depending on the investment, it's a calculated investment at this point to invest in a savings account when you're getting a 5% return with no risk again. So that is a lot. And of course, I'm benefiting from that. I'm definitely putting a lot of my savings into that. And then I'm still investing because I want to get in at the bottom so that it will rise to the top in good times as well. So if you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily, and I can't wait to see you on the next one. Peace.